Successful traders, they often rely on proven indicators to help make their trading decisions. And the most powerful among these are the buy and sell indicators. And these tools that can actually help you identify trends, predict market movements, and can actually help determine the best entry, the best exit points for your trades. So let's talk about price action signals. And these are just a type of technical analysis that traders use to identify buying and selling opportunities in the stock market and other markets. Now, price action is just based on the idea that price movements can be predicted by looking at past market data. And this data that people will look at will include trading volume. It will include open interest. It will include stock prices that the buyers and the sellers are willing to pay, investor sentiment, etc. There's a whole bunch that goes into it. We can keep it simple. So when it comes to identifying buy or sell signals from price action, there are several indicators that we can look out for. We can look out for support and resistance levels. And these indicate when a stock's price has reached an area where it will likely pause before continuing a trend. Now, the breakout occurs when that price moves beyond a certain level. Trend reversals, they're going to happen when the current trend direction changes. So this can mean a bullish turn after a bearish one, or vice versa. Moving average signals, these are important for traders because they also provide insight into the current price trend. So when price base is under resistance or above support, this could be a signal for a continuation trade. Breakouts, well, they can be treated as a buy and sell signal using an opening range breakout strategy. Trend reversals, as in that example, these are sell signals when a higher low is broken by price to the downside. Let's talk about moving averages. These are one of the most popular indicators out there. So they can be used to identify changes in trend, extended markets, and as signals when price rises above or below an average of how many periods, it doesn't matter. So a short-term moving average that crosses over or under a long-term average can be indicative of a change in the existing trend and give you a chance to enter a position. So traders can look for crossovers of the moving average and then a break of a swing high or a swing low in price for an entry. Pullbacks to the moving average after a crossover can also be used as buy and sell signals. Traders can look for price to be extended far from the moving average. Expecting mean reversion to take place after an oversold or overbought condition can also be a trading signal. The formation of a reversal candlestick or inside bars, this is a viable approach to enter these types of trades. So the extension of price from an average price is the actual buy and sell signal. The entry trigger is a break of the high or low of the candlestick pattern. Stochastics, these are pretty popular as well. They measure momentum of price with overbought and oversold levels, and that can help provide entry points. When we see a divergence between price and the stochastic indicator, that can also be used as an indication that the trend is about to reverse direction. So the stochastic oscillator, it works by comparing a security's closing price to a range over a given period of time. So this oscillator is going to fluctuate between 0 and 100, where readings above 80 indicate overbought, readings below 20 indicate oversold. So when that oscillator moves from one extreme to another, it generates a buy or sell signal. So for example, if the oscillator moves from below 20 up into the 80s, this is definitely bullish, right? We might see price continuing higher. So if the indicator rises from below 20, which is oversold, and then price breaks a resistance zone, well, this could be a buy signal depending on how you lay out your trading strategy. When price tests support, and it doesn't gain downside traction, and we get a hook of the stochastics fast line, that could be a buy signal. It can be a trigger into a long trade. The settings here are 8, 3, and 3, and these are my favorite settings for this indicator. Some are going to use the indicator for divergence, but I prefer to use the MACD for that. Also, listen, divergence is not a buy or sell indicator by itself. You need to incorporate price action for confirmation that there is a price change occurring. Day trading signals, well, day traders, they look to capitalize on fast price changes, often turn to short-term strategies to do that. So it's essential to spot signs that can show when that market could be ready to move up or down to achieve success with day trading. And technical indicators, a lot of people use them for day trading as well. And price crossovers is one of the simplest ways to determine whether an asset is going up or down is through a crossover. So the crossover, again, is when two moving averages, typically a short-term like a 5, crosses over a longer term like a 20 period. So when the shorter term crosses over the longer term one, it suggests a shift in momentum from bearish to bullish or the opposite. So for example, if the 5-period average crosses above the 20-period line, this could be looked at as a buy signal. And on the flip side, if it falls below the 20-period line, then it could be a sell signal. Volume, it's another useful tool for day traders, and it measures how much of an asset's shares have been traded during any given time period. So when you see high volume, it typically indicates increased interest in an asset. Low volume often suggests low interest. So when you use breakouts as a buy and sell signal, some are going to say you need to see strong volume. Strong volume compared to history is generally confirmed only after the breakout has occurred. You want to look for increased volume in the minutes, the hours, and the days after the breakout. So you'll enter the trade and you'll monitor for an increase in trading activity. And look, you might take small losses over time, as with anything you do in trading, but you will be positioned well in advance for those trades that run 10 times your initial risk. Swing trading signals, trend lines, very popular thing to use. We just create these when 2 or more highs or lows form a line on a chart, suggest an uptrend or a downtrend. So when price breaks above or below these trend lines, it could signal that the current trend's coming to an end, and it's time to enter into a trade in the direction of that breakout. Moving average crossovers, not just for day traders, swing traders can use those as well, but you do want to see some supporting price action. Stochastic oscillator, we talked about these. If you're looking for high reward short-term trades, it could provide you with some useful information. Using the oversold overbought reading as a sign to look for price reversals, viable approach. Combine that with trend line breaks, might increase the odds of your success. And swing traders may also decide to day trade around their position. They'll take short-term moves even against the overall direction of the swing trade. Well, that can add up to a pretty good income while you're holding on for bigger swing gains. So the key to successful trading is really understanding the buy and sell indicators for traders. When you combine price action signals, moving average signals, stochastic signals, you could gain a better understanding of when it's time to buy or sell. With this expertise, you could make sound decisions, could result in rewarding trades over time. Of course, risk management and just trader psychology is going to make a difference. But first and foremost, get yourself a profitable strategy. And over here on the left, we have a free indicator blueprint you can download. A lot of people charge $97 for courses like this, but this is free. The link is to the left or down below in the description. Thanks for watching.